Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Dave Bartosiak here with my top stock pick of the week. It's Chewy, ticker CHWY. If you haven't heard of them, they are an online pet supply store. Why does that make sense? Well, we've got the whole stay-home economy happening. We're pretty much all under quarantine, stuck at home. And not like buying pet supplies was the most exciting part of our day anyway. So now we can just order them up from our home offices, which is great. Most of us having home offices since we're all stuck in quarantine. Uh, Lots of veterinarians have been telling people to use this service. Rather than going to your PetSmarts and Petcos of the world, they not only do they have just food, but they've got all sorts of stuff on there that people have been utilizing. So, a huge beneficiary of this stay-home economy. But let me go ahead and take a quick little peek here on the estimate trends we've been seeing. I'm going to go ahead and share my screen here in just a second, and you'll be able to see what I'm talking about here. So over the last 60 days, really, you've seen an uptick in these earnings estimates. And I guess I'm using the term earnings lightly, as current quarter is calling for a 14-cent loss 60 days ago. That's moved up to an 11-cent loss. Current year, 45-cent loss up to 37-cent loss. Next year, 27-cent loss to 12-cent loss. So that's not, fantastic if you're just looking at that. But really, what I want to look at here is take a look at some of these sales growth numbers, because you can't fake sales, right, folks? So looking here, you see year-over-year growth estimates for the current quarter, nearly 40%. This year is going to round out 38.5%. Next year, they're looking at 20.75%. So those are pretty big growth numbers there for Chewy. That's something I think you're going to see continue on in the future. Of course, there's other online giants such as Amazon that could come in here and theoretically eat Chewy's lunch, but right now there's a ton of momentum. They're getting a lot of new customers, and I think that something like this, those customers are going to be a lot stickier than people believe. So I'm expecting Chewy to have a fantastic run over the next several months. Main beneficiary from this new stay-home economy. So while you're staying home, stuck in quarantine, think about stocks just like my top stock pick, Chewy.
Hi, I'm Neena Mishra, and my top pick today is Microsoft. I've talked about Microsoft a couple of times in the past too, but I believe that the investment case has become stronger in the current environment because we are now looking for companies that can survive and emerge stronger when we get to the other side of this. And so that is why I like companies with strong balance sheets and cash flows. And within that group, I look for companies that can benefit from the work from home economy because this trend is going to continue for quite some time. Even when we start opening up the economy, our lives will not be back to normal till we get an effective vaccine against this disease, and that is not going to happen for the next 1 year at least. So companies that benefit from this trend of telecommuting, they are in focus in the current environment. And that is why we have seen a big increase in cloud computing in recent days, because cloud computing gives companies a lot of flexibility and agility in scaling up or down their computing needs according to their business needs, and that is relevant in the current environment. And additionally, Microsoft's workforce collaboration platform, which is Teams, it has seen its usage surge in the past few weeks. Uh, so that is why Microsoft is poised to gain from the current environment. And talking a little bit about the company's background, this company has kind of reinvented itself since Satya Nadella took over as CEO about 6 years back. And after many lost years, they shifted their focus to cloud computing from traditional software sales and invested a lot in their cloud segments, Azure and Office 365. And that is paying off now. Microsoft is actually the second biggest player in the cloud space behind Amazon, but their cloud business, Azure, is growing faster than Amazon's AWS. And that is the reason why the company continues to beat quarter after quarter. They continue to beat both in top and bottom lines because of very strong growth in their cloud business. So in fact, if we look, let me go to the price and EPS surprise chart. So you will see that you can go to the code page and you can look at the price consensus and EPS surprise chart, and you will see that over the past 5 years, Microsoft has missed only once. That's a very solid performance and strong beats records. That is why the stock has surged over 300% in the past 5 years. And this year also, the stock is up about 11%, even though the broader market is down. So because of the strong beats record, the stock has surged over 300% in the past 5 years, whereas the S&P 500 index has gained just about 30% during this period. Another reason why I like Microsoft is that it has a very strong record of returning cash to shareholders in the form of dividends and share buybacks. They have been increasing their dividends for the past many years. And the latest hike was in September, 11% hike. And at that time, they also announced a 40 billion share buyback plan. Now, another reason why Microsoft stock has been very popular is because of the trends towards ESG investing, socially responsible investing, especially younger investors and institutional investors. They have been focusing, they have been prioritizing social and climate factors in their investment decision. And Microsoft scores well on all three ESG metrics: environmental, social, and governance. And in fact, earlier this year, they announced that they would go carbon neutral, carbon negative by 2030. That is why the stock is one of the top picks in most ESG funds. So those are some of the reasons why I like Microsoft. The company will report next week, and at that time we will know what is the impact of this crisis and shutdowns on the stock. But I think it is a great pick for long-term focused investors. And in full disclosure, I own the stock in my personal portfolio. Thanks everyone for watching. Stay safe and be well.